Hello, good morning, good evening, good afternoon, everyone. This is Peter DeMeo from Singapore, nice and sunny and warm here today with James, Dave, and Chris. We're going to be talking about trends in information security around infrastructure for financial systems. I work for IBM, and my role for the last 4 years is building confidential computing technologies for digital asset infrastructure. I'll just pass it over to James.
Hi, good evening, good morning, wherever you are. I'm James McLeod, Director of Community at FINOS. We are the FinTech Open Source Foundation and part of the Linux Foundation. And thank you for inviting me to the panel today.
Dave? Sorry, Chris? Sorry.
So you're going around clockwise. Hi everyone. Yeah, my name's Chris Michael. For the last 5 years, I was up until recently leading the development of the UK Open Banking Standard, and also for the last 3 years, I was the co-founder and I've been leading Ozone. We're a software company who develop API solutions for banks in multiple parts of the world, to help them deliver on the promise of open banking, open finance.
Yeah, hi, my name's Dave Tonge. I'm the CTO at a fintech company called MoneyHub based in the UK, and so we consume open finance data and active in that space. I'm also the co-chair of the financial grade API working group at the OpenID Foundation, where I kind of work with colleagues around the world, trying to define some good interoperable, secure standards, so that we try and avoid the whole not invented here syndrome and people keeping on making the same mistakes in financial and wider than financial services.
Great. Well, why don't we just get started, gentlemen? I just think it's nice to kind of look at current events. And just yesterday, in fact, in the U.S., it's still today, I guess. The Department of Treasury, the Office of Financial Assets Control, OFAC, which is responsible for enforcing the Bank Secrecy Act and others, they issued an updated advisory that sort of highlights that the risks associated with, well, in this case, ransomware payments in connection with malicious cyber-enabled activities. Janet Yellen, who's the U.S. Treasury Secretary, recently proclaimed that ransomware and cyber attacks are victimizing businesses large and small across America, and they are, in fact, a direct threat to our economy. These kinds of attacks are increasing in scale and sophistication, frequency. They're victimizing governments, private companies. In fact, in 2020, ransomware payments reached over 400 million US dollars, which is 4 times it was back in 2019. In addition to the millions of dollars that are paid in ransom and the disruption in critical sectors, including financial services, healthcare, and energy, there is an exposure of confidential information, which can actually cause a lot of damage to people. So such payments, not only encourage and enrich malicious actors, but they also, of course, create a vicious cycle, perpetuating and incentivizing additional attacks itself. And so with Chris, now we're moving into this era of open finance, and you've been doing a lot of work in open banking and so forth. How do these kinds of attacks, these trends, how are they affecting the financial markets in this space?
Yeah, I think the short answer is we don't really know yet. I think what we've been seeing up until now is most of these threats are aimed at or targeted at the institutions that are the prime source of your data. So if someone wants to get access to your bank account data, they will target your bank. And what we're seeing with this move towards open APIs, it's really starting in most cases, it's starting with open banking, which is, I'm sure we all know, we've got probably a slightly different version of it, but at a high level is the construct by which a customer can give consent to another party to have access to their banking data for a number of different purposes. And the good thing about the model of open banking is that it's based on the premise of trust, that you as a customer trust the third party that you're giving access because they're regulated themselves. and that model has got a lot of benefits, because it means that, yes, there might be a relatively small number of players that will then have access to your financial data, but they're trusted firms. But it does in theory increase the attack opportunity, the surface, if you like, because your data can now exist in your financial data, your banking data can exist in multiple different places. We haven't really seen, I don't think yet, any strong evidence that says it's in the real world actually increased the number of incidents of attacking a financial data. If anything, it may actually reduce it. I don't know. But what we are I suppose all concerned about is this movement of open banking is the tip of the iceberg, because we're seeing a global movement towards, in Australia it's called consumer data right, but a global movement towards customers being able to access their data and share it more widely. And at a high level, that does potentially increase the risk quite significantly if valuable data that belongs to an individual can exist all over the place. And I don't think we've got a solution to this yet, but I think it's something that we need to think about very carefully. What I'm a very strong advocate of, though, is that this shouldn't be used as an excuse to stop or slow down the movement of open banking, open finance, open everything, because in general the benefits are very, very significant. And as long as data is being shared between trusted firms who are regulated and held to account, then I think the risk is relatively small. And I'm not sure it's a bigger risk than we've got at the moment. If anything, as I said, it could reduce the risk, because the way that a lot of attacks happen at the moment, a lot of data is accessed, whether it's phishing or other methods. I think inherently, if you put in a secure framework for open banking, and you base it on strong standards, and I think Dave's much more an expert in this than I am, but a strong security model and strong standards are a very good way of protecting against these sort of attacks anyway.
Great. It's amazing.
Thanks, Chris. Yeah,
I mean, I hope it's okay for me to come in after Chris. So that was actually a really great introduction, and thank you, Peter, for opening the conversation as well. It'd be good to reflect on, what the outcome, of these types of cyber attacks can actually be. Now, fortunately, I've not actually, been involved in anything, within financial services, as a result of ransomware, but I have been involved in ransomware outcome through Garmin and personal data through a Garmin device. Recently, I was training for like a half marathon, and I remember Garmin were victims of ransomware, where all of their data was encrypted within their own databases, and it meant that their entire, and I think it was to do with their mapping, was down, not only for home users, who use Garmin devices to track, their exercise wherever it may be, but it also affected pilots and people who were navigating, around certain, maps, and needed geolocation to get, from A to B. And that was actually a big problem, because data is actually fundamental to, services operating, so you might have software that operates and actually, provides data in, data out, it's accountable for UX and, user experience. But without the data there, without you being able to interrogate your data and maybe, update data where it needs to live, a system is actually rendered useless. And there was actually a bigger impact. And I'm not, living in the US, you can probably tell by my accent, I live in the UK, but I understand that either, an oil pipe or, a gas pipeline within the US was actually rendered useless quite recently due to a ransomware attack. And so as you kind of look at, the scenarios that we have, from me with my, personal device that I'm wearing, I can't go out running and track my running. It's a nuisance. But, then it scales up to people not, being able to fill their cars up with gas or petrol. And then if you scale that up into, personal finance, and how a ransomware attack could actually render your own your whole banking, infrastructure invalid, from ATMs through to, personal finances, loans, mortgages, credit cards. That would also impact open banking, which actually feeds off of all of this information from the source of banking. Ransomware is actually a massive issue, and it's something that we need to take really seriously. And the attack vectors that we were discussing previously are from multiple different angles. And so knowing the threat is out there and it's big, and it's actually something that we should be aware of, understanding what those attack vectors and how people manipulate kind of like lots of different entry points is actually really important. And, it'd be really interesting to see, number one, whether people agree with, the devastation that it's caused personally or to, a global infrastructure, if I got that right. And number two, as engineers and scientists and people on the ground, people working in offices, what do we actually need to do to safeguard ourselves against that? How seriously should, my grandmother, at home, disposing of, paper statements, with her address details on it, should she be aware of this? Can her details be used to manipulate, the banking system? To what extent do we need to be aware? That's what I'd be really interested in. Maybe Dave, from MoneyHub, it'll be really interesting to see whether, you have to, account for all of this, these type of attack vectors from where you sit within FinTech.
Yeah, we do, and I suppose for us, we see ourselves as a tech company, and so it's that's just part of how we operate. That on just principles of least privilege and just following a lot of best security practices. I think part of the problem is that over the last 20-30 years, most companies, especially most big companies, have essentially become tech companies or have significant tech parts of their infrastructure, yet they don't run like tech companies. And that's where they're opened up. And so, I think ransomware is most common in manufacturing industries where, yes, they are dependent on technology, and therefore, ransomware can take them out. And but they're not necessarily seen as tech companies or running like tech companies, and therefore maybe not following best practices. And I suppose from my perspective, kind of touching back on what Chris was saying about data, it's kind of at a high level, it's the same thing. Some firms, once an attacker gets in, perhaps ransomware is the best way, and encrypting data and shutting systems down. For other industries, if we look at kind of like the Equifax, data breach, if a company has significant data that actually can be accessed, well, that's what the attackers are going to do. And in other industries, kind of payments are going to be made and money is going to be stolen. So, but at the end of the day, I suppose it's attackers getting in past the security. And I think that the crazy thing is, to be honest, that there's so many, like, the technology to make these attacks a lot less likely has existed for quite a while. But we're generally as an industry, it's quite hard for things to update. So, I suppose for a very large multinational firm recently, I won't mention their name, I had to sign up for an account, and I had to enter a password, and there were all these password restrictions, and the password expiry, like it was only allowed to last for 90 days, I think. I had to answer about 4 different security questions about, I don't know, my mother's maiden name, and I know the first car, and and then a load of questions that I couldn't remember. But the irony is that's all old. That, like, NIST recommends not to do any of those things, and yet it's still common practice. Anytime someone asks me to rotate my password, my often email to them is, "Oh, have you suffered a breach?" Because the NIST guidelines is that's the only time that you ask users to rotate their password. Yeah, so there's a lot of bad security practices which are endemic. And maybe just finishing off, the good news is I did see a headline from Microsoft the other day where they are finally allowing people to have accounts without passwords. I mean, it's just crazy that we're still using passwords in this day and age, especially when to protect access to, let's say, very expensive industrial machinery, or to protect access to kind of significant financial infrastructure. A lot of places are still using passwords and are still using authentication methods which can be easily phished, and that doesn't need to be the case. I mean, I've got I'll just pull it out, I've got, a little YubiKey, very, very, very tiny. But with this, the accounts I've got protected with this, an attacker, even if they know all my passwords, even if they manage to hack, my SMS and my phone, hack my email, they can't get in without this key. And this tech has existed for ages. So I suppose, yeah, that's where I'd be coming from, that we need to somehow try and get these best practices better adopted across industries. And yeah, that's, my particular area of expertise is on the API level, but I think more generally, best security practices, they exist. They're just not being implemented.
Yeah, I would say, kind of building on that, recently there's a study that was done that, especially with, the pandemic and everybody's working from home and bring your own devices and all, what kind of impact is that having on the enterprise? And, the enterprise, quite frankly, is really still using, like you're talking about passwords, they're still using perimeter-based network security, right? Which is basically the golden wall. Once you get inside, okay, game on, right? And the principles of zero trust architecture, NIST 800, are starting to, from a trend perspective on the other side, I would call that one too, in terms of the adoption, just even recognizing that, beyond identity and credentials, you have access management to all kinds of resources, operations, endpoints, hosting environments, interconnections. And all of this, should be authentication and authorization, like in a real-time basis for the smallest possible, scope as you can have it. And and it should be kind of driven by policy, right? And that policy should be specific to a particular scenario instead of just being a broad-based. And then there's got to be some kind of enforcement mechanism, for the policy itself. In digital assets, I often joke about this, but it's kind of true. The entire digital assets, value, if you will, is now in the trillions of dollars, right? Now, you may not subscribe to that whole thing, but it is. And I would say 85-90% of those funds are sitting on Amazon, okay? And Amazon's x86 commodity servers that, quite frankly, have to be maintained by administrators, and others. And people can get to that stuff, okay? We kind of joke about it, but actually, there's a number of scenarios where things actually are sort of happening. We saw recently a Pakistani national was sentenced to 12 years in jail because he was running this ring where basically he paid off AT&T employees to set up fake companies and invoices showing payments being made presumably to some company, to AT&T or whatever, and basically turned into a big SIM swapping kind of a thing, right? Where thousands of people were SIM swapped, and then their accounts, okay, because they weren't using Adeva YubiKey, they were using SMS for their second factor, and guess what? They lost their funds. And in crypto, they lost their wallets, and millions of dollars were lost that way, right? So it's a real problem, and we're seeing constantly these examples. In IBM, we talk about something very fundamental. It's something called operational assurance and technical assurance, okay? Now, operational assurance is like, yep, we've got the CEO to the company saying, yep, we're going to instill policies and procedures where everyone's going to behave themselves. Yeah, and then the cloud provider, pick one, their administrative personnel and their operations personnel, yep, we're going to go ahead and follow the rules. Okay, and if everybody does that, it's no problem. The problem is this, is that not everyone does that. And when you're talking about vast sums of money, crypto or otherwise, okay, and you're talking about an hourly employee, and they think they can get away with it, things happen, right? And things happen is this, they have what's called operational access to these servers. And these servers generally are not protected in any particular way. You're not running an encrypted memory or a protected memory or something to that effect. And and they can access these things. They can access policies. For example, in my world, a few weeks ago, there was one of the largest crypto exchanges that basically had the preeminent security in place called Liquid Exchange out of Tokyo. And they use something called multi-party computation, which is a technique where you kind of take a private key that you use to access these accounts and make trades and so forth. And instead of actually having like a quote, a physical key, okay, what you do is you generate key shares and you distribute it geographically, right? And then when it comes time to do a transaction, you don't actually have to physically recreate this thing. You don't have to get everybody in the same place. Everybody simply, uses their key share and they approve the transaction, and then the collection of the quorum of them all approving, then you have some fancy math that essentially signs those transactions without actually having the physical key. All right. Now, that technology, secure multi-party computation, is what all the major financial firms are looking at as they move from traditional finance into digital asset finance. Okay. And Liquid used the same. In fact, Liquid used the preeminent provider of secure multi-party computation. They themselves have a FIPS rating, a FIPS 140-2 level 2, okay, rating, all right, which is the highest you can get for software crypto. And still Liquid was attacked and wallets liquidated at Liquid. I just thought of that, for the tune of $80 million. How is this possible? Well, turns out, okay, we don't actually know why it's possible. We don't really know, because Liquid's never actually come out and said, hey, this is how we got hacked, right? But if you know something about it, you have a pretty good idea about what happened, right? So, if you have secure multi-party computation and you're pretty certain that those aspects are not going to be, hacked, okay, because it's difficult to do that, then what is hacked? Well, it's the orchestration. In this case, I think what it was is you have these signing bots that have been given the approval, if you will, through policy that under a certain threshold, they can go ahead and automate transactions. And by changing that policy without anyone really knowing about it, they all of a sudden were empowered to do a lot more, right? So what happened? Well, it's the policy that got changed. The policy, the rules, if you will, okay? And in fact, one of the key aspects that the Zero Trust architecture talks about actually is policy and protecting it, and protecting the enforcement mechanisms as well. And what we think happened here is that last November, there was another hack at Liquid, and it was no funds were lost, and people didn't really pay much attention. They said, well, emails were compromised. But what I think really happened was administrators, their accounts were socially engineered, okay? And it was the administrator who then had the ability to change the policy. So then they lie in wait. In this case, they almost for 10 months. And then boom, when no one's really paying attention, in my mind, no offense to Liquid, it happens and the policy has changed. So even when you have, you would say, the most secure technologies in place, when you are applying the principles of real-time authentication and authorization at the transaction level, you can still be vulnerable by virtue of the fact that if you haven't secured the rules and the workflows, you're still going to have problems.
Now that is a really interesting insight. And sorry, Peter, I'm actually feeding back on your microphone. There you go. Thank you very much for muting yourself. That's really interesting because coming from an engineering background, I often look at, what are the mitigations, for bad actors actually getting into your software? And so, when you are working within a bank, so whether you're an IBM engineer, working in a data center that is, being run on behalf of a bank, under strict regulation, there'll be segregation of data, there'll be segregation of the actual physical boxes themselves. So if you are in a private cloud or whether you're in a physical data center of mainframes, your data and all of the computation that's actually happening against that data won't be run, on the same physical boxes as anybody else. And so, the bleeding of, computation processing, it just won't kind of like exist, with another bank or even a non-banking system. And then you also look at the compliance around, physical networks within a bank and how you actually stop. any rogue software making it through firewalls, through tightening down policy on, people's individual laptops, or even, stopping certain software from getting through the firewall. There's a lot of physical constraints that you can actually put around, a bank to stop all of this stuff, getting in. And I'm not saying that, there aren't any vulnerabilities there. That vulnerabilities exist, like what you were saying. A bad actor, being a physical human, could come in through the front door and do something, like taking data and using SMS, to exchange it with somebody else, or sharing passwords, like what Dave was saying, or picking up people's identities out of recycle bins outside their front doors. But when it comes to the actual changing of a physical policy within software engineering, we go through lots of stringent testing. We'll run scenarios. We'll have TDD that, looks at all of the, functions that you're actually writing, and make sure the outcomes actually, fall in line with the inputs. You'll maybe use, BDD in order to do, user-driven or business-driven development. So all of the engagement is actually happening through the UI, and so everybody, understands how your software is engaging with the user, and then, how that software is engaging with the data. But the actual policy, that an administrator applies at the policy level, does that get tested? Do you actually have to go through the same level of rigor to update a policy, and take it through all of the various different development, and then pre-production through to production scenarios in order to apply that in the environment where it could actually, do swaps and, send transactions to places? Is that where, that particular liquid vulnerability will be, because somebody was able to just go into wherever they're storing those policies and just update a system through, some form of UI that's, browser based? It'll be good to know whether that would have been a physical, scenario that could have played out there.
Yeah, I mean, it's interesting. Certainly there's going to be process involved with a human. But, the other thing, James, that we're seeing too, from a trend perspective, is the use of artificial intelligence and other software-based agents to actually do and manage security issues and enterprise networks as well from attacks. So they call this non-person entities in the zero trust world. And really the big risk there is kind of getting to your point, like, what's the bar? If everybody's sort of like, oh, it's artificial intelligence, we're just going to trust this thing, right? But where you come in with problems is that you have this sort of possibility for false positives, right? Which are essentially innocuous actions mistaken for attacks, and then the other side of it, which is false negatives, which are basically attacks that are mistaken for normal activity, and these kinds of things, happen, I would say, at a greater potential when you sort of like, oh, I'm just going to let the AI bot handle this, right? So you have customer service issues, of course, that come out of that, right? And then more than likely, you could also get, compromised and not know it again, because you're sort of relying on this bot to sort of look after things, especially if you're trying to economize resources. And how we've heard this story before, right? Everyone's trying to reduce, resource, administrative staff, operations staff, wherever possible, automate, and boom, you got yourself some malware.
Yeah, I mean, I was just going to add, I mean, it is scary when you see, people who are really sort of, should be on the ball when it comes to security, essentially, having vulnerabilities. And, the attack's always going to go for the weakest link. And, the weakest link often is a human or some code or policy that a human has written. So, I would say it's impossible to 100% protect against some of these things. But I suppose where my hope would be, and this is where I think things like GDPR are helpful, and I hope there's almost more enforcement, is that when there is a financial cost to either a data breach or just the reputational loss, or the money to ransomware and the reputational loss around that, I think that forces companies to change. And what I think we're seeing with some insurance, it's not enough at the moment, but insurance can force people to have better security policies, to kind of implement things better, in the same way as physical security. You don't get things paid out if, I don't know, you don't have your fire extinguisher regularly checked and things like that. You know, I think, you know, we're a little bit behind, but hopefully we can push towards the same thing, you know, with a lot of security infrastructure. But I suppose what the realization is that it can't be that, you know, the big companies and the people who are in the space, they can pay the experts and they can build all their own solutions, but most companies can't. And that's where I think we need international open standards. We need things, you know, so on the API layer, there's quite a lot of existing standards already, and that's part of the work we do with the OpenID Foundation. But, you know, when it comes to authentication, there's a kind of FIDO standards, and, you know, there's a new initiative launched recently, you know, called GAIN, the kind of globally assured identity network. And so my hope is these things, they seem a bit boring and they don't seem very kind of interesting, but I think kind of interoperable security standards and security mechanisms actually can have a huge impact on sort of overall security, because it can get to the long tail. You know, yeah, your big cloud companies and big crypto companies, it sort of doesn't affect them. They're going to do their own thing anyway. But this long tail of so many, you know, SMEs and you know, who are affected by ransomware, affected by all of these things, if there are the right standards. And I mean, I would, you know, just quickly going back on your Amazon vulnerability. Yes, if I'm a crypto exchange, Amazon, you know, Amazon or Azure or wherever, Google, you know, yes, I need to kind of include that in my threat model. But for most smaller companies, or, you know, actually it probably is a lot better to move as much stuff as possible to one of the big cloud providers, and to, where possible, use their kind of off-the-shelf services and not build your own systems. So it's kind of, I think it's almost, you have different threat models depending on who you are. Yeah, a crypto exchange, definitely, you got to be aware of an Amazon employee coming in and taking your box. But, you know, your average SME, far better that they're with one of the big cloud providers than their own systems.
Yeah, I mean, I think you're right, especially since the clouds are, in fact, adopting these zero trust principles in their own infrastructure, so they're going to know better, et cetera. And I think, you know, here's a little IBM commercial. You know, I was mentioning about operational assurance, and that's what all the clouds provide today. So Dave, if you're going to throw your stuff out into a cloud, then why not throw it into a cloud that doesn't offer operational, but in fact offers what's called technical assurance? So in other words, now we're going to sort of talk about technology that prevents administrators from being evil, hard stop, and prevents, when you're deploying applications into the cloud, it also prevents malware and backdoors from being introduced as well, right? Because you can do a third-party attestation as part of the build cycle itself. So there are technical ways to sort of limit the blast radius with respect to moving to cloud and taking advantage, you know, of these more mature operational practices as you're talking about.
Yeah, I think I don't think there's no kind of silver bullet solution to this. I think there are two kind of things that I think are quite sort of relevant and important in this area. Dave, you think you touched on one of them, and it's around identity and having better standards around identity. I mean, it's a bit of a tough one, because there are a lot of kind of lobbyists against digital identity, and, you know, kind of saying it infringes people's privacy and etc. But having strong digital identity that's kind of trusted, you know, to access or use various systems, I think is a good way of ensuring that actors are known, that you know who's accessing the system, and there's an audit trail, etc. I think it's very painful, slow progress. Having been involved in this kind of identity space for a number of years now, it's quite frustrating, because things are moving very slowly. It's because it's a difficult problem to solve, I guess. But I think the other thing is the fact that we are at last starting to see big businesses embrace the cloud, and you know, starting to think about, you know, I'm a big business, I'm a bank or whatever, do I really need to manage my own data centers, my own hardware? You know, wouldn't I be better off letting Amazon, IBM, Oracle, Microsoft, someone else manage that? There's still quite a lot of misconceptions and misunderstanding and vested interests and things in that space. But as a general rule, I always think if you, whatever size company you are, you've always got to think, right, do I try and do this myself, or do I trust someone else who can probably do it a lot better? Almost no company would try and build their own email system now, right? You'd use Microsoft or Gmail or something. Almost no big company now will try and use even if they're using Microsoft, that almost no big company will now try and manage their own mail service. So I think that all of these things are, I think, important steps. But yeah, my underlying concern about all of this is the time it takes both regulations to move in this space and also big businesses to move in this space. And I think that's where there's a bigger opportunity for bad actors to play, because big businesses and governments don't move particularly quickly.
Absolutely. And what I was actually going to reflect on is that within the cloud space, all of the cloud service providers need to adhere to, when I say local banking policy, I mean the policies that are actually being applied by the bank that they're representing, and also the regulation that exists, within the country or the region globally in which they are operating. But something that I would like to point out, so I've kind of made some notes as people are talking, and the thing that I've noticed is that there are lots of different angles. And so Peter, you're absolutely right. I mean, infrastructure and making sure that the way that the cloud is operating, all the way down to the way that the people within those data centers are looking after the hardware, and you can trust those people. That's absolutely right. You need to make sure that, whether you're a bank, whether you're, working in cryptocurrency or fintech, you trust the people on the ground, and you actually trust the physical hardware and where that data is stored. And I know that IBM do actually provide, physical data centers, which are like hardened, bunkers that people can't get into. And I'm certainly hoping that the other cloud providers are providing similar for, banks who are moving in their direction as well. But I do also think that although there isn't a silver bullet, because the attack vectors are so broad, and we've had some really great examples today, I do think that there are some, open standards and open policies and transparency that can actually help mitigate this, rather than centralizing, the mitigation of risk from, security and breaches and ransomware and, other types of malware. I think, like Dave was saying, having open standards, like open banking, that people can actually scrutinize, and where people, who are also looking in these areas can come together and talk through how do we actually recognize, where security is being breached, and how can we actually react to that, in the strongest possible ways. And if, something is recognized, how can we actually update that standard, and get the new version agreed through industry up and out there for other people to follow. I think that kind of accelerates, the way that we actually recognize and adapt and move forward and secure our systems from a logical standards point of view within software engineering. But then something that I wanted to push out there, when it actually comes to keeping people's data safe. So Chris, within open banking, it's about the distribution and decentralization, of people's data. It's almost pushing the data back to the owner, which is the individual customer. Do you think that having decentralized data, through blockchain, hyperledger, other types of, decentralized data mechanisms, through Ethereum or, other blockchains, Bitcoin, etc. Do you think that, having a logical answer to this, so we can see where fraudulent activity is taking place on a node rather than within one centralized database, could also be, an approach that mitigates, the hijacking of people's data? So if you can see that one particular node on the blockchain has been compromised, you can actually isolate that, because compared to, all of the other peers around it, you know that one, doesn't adhere to the latest version, or, is different to everything else?
I'll answer a little bit, but I think it's maybe also more one for Dave. But it's something that we've thought about a lot, and there have been a lot of discussions around this, around how do you kind of, protect data that flows between lots of different places. And one of the concerns about a truly decentralized model is that it does raise significant challenges for firms that offer services based on combining data from different sources, enriching, enhancing, transforming that data. It's quite difficult to do that using machine learning type techniques, amongst other things, but it's quite difficult to do that if all the data is decentralized. So if you're a financial service firm and you want to categorize data, combine it with other data, enrich it, and provide extra value to your customers, it's quite difficult to do that if all the data is decentralized. But I'll let Dave talk a bit more about that. But I get your point. In theory, it might mitigate and solve some of these issues.
Yeah, look, thanks, Chris. I'd agree, to be honest. My personal opinion is that it's great in theory, but even if we look at the crypto today, it's pretty centralized. The fact we're talking about these exchanges and wallets getting compromised, it's flies in the face of how it was supposed to be originally, that people would have their own private keys on their own devices and would trust no one. So I think that just shows people, we need trusted intermediaries in to function in this digital world. Apart from, unless you want to be you'll get some real hardcore geeks who can kind of manage everything themselves, and there's a small niche for those. But for most people, it's about a value exchange. That they're actually happy to share the data. They want regulation around it. And that's where I think, things, sometimes, some of these problems I don't think can be solved purely with technology. They need policy. They need things like GDPR, which, while not perfect, is a step in the right direction. And so I think that's for most end users, they don't really care about things like, decentralized data. They want to be able to access a good service, which either saves them money, saves them time, or makes their life better. And they don't really care how that's provided. I do think there are some cool things we can do technology-wise around privacy, which is quite relevant in kind of some of these things, around vaccine passports and COVID passes. Essentially, that there are things we can do with technology so that I can prove that I'm over 18 without proving, without having to show my name and address and date of birth. That there are ways. So I think that's an area where kind of a little bit more of this. Not just sharing all of your data, that's an area where the technology exists, and we just need to sort of somehow get that kind of easier to use and more out there. But in terms of kind of just things like open banking and open finance, I think the regulated model is a better model. So yes, the data is going to be concentrated in a few places, but let's make sure it's well regulated, and let's make sure there are consequences if that data goes. And the thing, just finishing on this, the thing with data is a bit different from payments or transactions. Data can be replicated, and even if you can put some strict physical controls on a device, someone can take a picture of a data, it's very difficult to kind of lock data down and to kind of add some sort of tracing on where a data breach occurred. It's pretty much impossible in the real world. So, let's rather just try and have better policies and try and enforce them.
That's great. Thanks, Dave. I think the other thing about the centralization part is, who are you calling when you got problems? Where's the help desk? So that's often something people think about. And, interesting, we don't have enough time to talk about self-sovereign identity and zero knowledge proofs, but certainly that is another topic when it comes to identity and how do we identify ourselves. And quite frankly, why do we have to give away our identity to all these different people and agencies and governments? We don't even own our own identity. I'm going to go off a little tangent. We don't issue our own driver's license, but that's what people accept for your identity, at least in the US, right? So we've got a whole lot of other things to work out too, I think. So guys, thanks so much for your time. I think we're out now for this particular panel. So James, Dave, Chris, thank you very much. Appreciate it. And everyone, if you have any comments or so, just throw them into the chat and someone will take care of it. Thank you very much.
Thanks a lot. Thank you.
Thank you.